Good morning or good afternoon, all depending upon where you are in the world. So really quick video on one of the big stories economically to have come out of the world this week. What was it? Well, it came out of the UK and it was the Deputy Governor of the Bank of England asking commercial banks what steps they would need to take if interest rates went negative. How does this impact you? Right. Normal people on the street, we'll look at three ways. So look at one, the cost of borrowing, two, the real value of money, and three, the real value of assets. Okay, so one, the cost of borrowing. Well, it should mean that things like mortgages, loans, car finance, repayments, etc. get cheaper. That is the entire point and would probably be quite welcome for most of us. And that is almost the entire point from a government perspective. So if people who were previously sitting on the fence, thinking about buying a house, but not quite sure, but the lower cost makes them take the plunge, then great, that spurs on the economy. If businesses were previously thinking about expansion, but the cost of expansion was maybe a little bit high, and now it's going to be cheaper, then it might now encourage them to take the plunge, thus giving an economic boost. Two, the value of money, the real value of money. And if you have to pay, right, sounds crazy, but if you have to pay to keep your cash in the bank, how much would you want to keep there? Probably very little, especially when you couple this with the fact that the price of goods and services is continuing to go up. That's known as inflation. So if you had your money in the bank costing you money to sit in that bank account, yet the prices of stuff that you need to buy is also going up, then a year from now the real value of your money has actually gone down, and probably gone down quite a lot. So how much would you want to keep in that bank account? As I said, probably not a lot, and that again is the whole point. It encourages consumers and it encourages businesses to go and spend rather than hoarding cash, and therefore should give an economic boost. Number three, the real value of assets. The real value of assets is also impacted stuff that you already own. The article that relates to this video that you can read below is looking at the value of final salary pension schemes in the UK, and what value and how it impacts the value, what value they actually have to you, to me, and to the business from which you work, who's got the liability itself. The chances are the cash equivalent transfer valuation, i.e. the amount of money that the company or the scheme is willing to give you in order to move that scheme into something that's more flexible, how much are they willing to pay you for it? The chances are that is going to increase because the cost of that liability, as interest rates go down, has also increased. So one thing we always say to people, and I always certainly say to people, is if you sat on one of those, please just get a cash equivalent transfer valuation. You're entitled to one with most schemes. You're entitled to a free one every single year, and lots of people don't even know that, and they never get them valued. I spoke to a lady just this week who's had a final salary pension scheme for 40 years and has absolutely no idea what it's worth. Mental. Ask the question, get a cash equivalent transfer value, doesn't tie you into anything, and you might find that that has gone up. If this was useful, then please, as ever, like, subscribe, and let people know about it. For now, I hope you all have a great week.